Bad credit? Here's how to climb back up the credit ladder. A bad credit score doesn't mean the end of the world, or of your dream to one day become financially free. You can actually work your way back up the credit ladder and even go higher by taking well-calculated steps over time. In this video, I will give you the precise cheat code to help you work your way up 100 plus points all on your own. This video is for you if you have a credit score of 700 and below, high credit card debt, a couple of late payments, or on even the verge of bankruptcy. So let's get started. What's up guys, my name is Gilberto from Credit Guys. Be sure to like and subscribe to stay up to date on all things credit and finance related. Let's get into it. Start paying off your debt consistently. This is the most straightforward solution to repairing your credit, which is why it's first. If your credit card debt is relatively high, the best thing you can do is to lower it as much as possible by increasing your repayments. Of course, this solution is only practical if you have the financial power to do so. If you can't do that, stick to making minimum repayments on time every time. Remember, a large debt and missed deadlines are the greatest contributors to a poor credit score. A good trick is to audit your financial life and should try to lower your expenses as much as possible. Then you can direct that extra income to increase your debt repayments. If you don't have the means to pay off your debt faster than you already are, don't worry. The next tip I'll talk about can help you. Consider debt consolidation. Now, if you're paying off your credit card debts the best way you can, but it's still not enough, you can consider debt consolidation. Debt consolidation is simply taking another loan to pay your existing loans. Yes, I know this doesn't make sense at face value. Isn't that fighting fire with fire? Well, however, when you have several loans that you are repaying every month, a debt consolidation loan can help you combine them into one payment. It can lower your interest rate and makes your debt much more manageable. Another advantage is that the loan affects your credit differently from your credit card debt. Credit card debt constantly changes as you use your card to make bill payments and purchases regularly. On the other hand, a debt consolidation loan works like a traditional loan, whereby you get the loan in one go and pay a fixed amount of money every month for a specified period. Explore credit repair options. Credit repair is basically looking for errors and discrepancies in your credit history. Now, you may not think this could happen to you, but according to the Federal Trade Commission, about 1 in 5 people report an error on at least one of their credit reports. While these mistakes may not seem like much, they can significantly impact your credit by, for instance, lowering your credit score, limiting your ability to get credit, or making that credit much more expensive for you. You want to identify and challenge them with a relevant credit reporting bureau. Now you have two options when it comes to credit repair. You can either scan for mistakes yourself or get a professional credit repair company to do it for you. If you decide to go the DIY route, check that the following information is correct. Personal details, for instance, is your identification data correct? Could there be an account mix-up or identity theft activity? Reported account status, have some of your accounts been mistakenly reported as late or delinquent, for instance? Balance mistakes, is the reporting a true reflection of your account balance or credit limit? Other data management errors, is other important data misrepresented? Become an authorized user on a family member's account if you have a family member or close friend whose credit card has a high credit limit and a good history of making payments on time. You can ask them to add you as an authorized user. Becoming an authorized user is basically piggybacking on the primary user's good credit to help rebuild your own. So, you entrust them with a part of your credit, and if they continue to use their credit wisely, your credit score improves. The best part about this is they don't even have to let you use the account. You literally do nothing, and your credit score still goes up. Amazing, right? Get a secured credit card. Now, as a rule of thumb, you want to avoid signing up for new credit cards if you're not in a good credit standing. You also don't want to only close your older delinquent accounts to open new ones, as that only makes matters worse. Instead, apply for a secured credit card to build if you're a newbie, or rebuild in this case if you have bad credit, your credit score. Basically, a secured credit card is backed by a cash deposit, usually the same as your credit limit. Specifically, you want to pick a secured card that reports your activity to the credit bureaus. You also want to check whether the provider allows conversions to an unsecured credit card, as eventually you want to move to that. Remember, the goal of this card is not to give you another line of credit, but to repair your credit history with positive credit behavior. So keep your balance low and pay on time. Work on your credit habits. Now, last but not least important, monitor your credit habits. Often it is your habits and not your income level that hurt your credit. Without a change of habit, it will be hard to grow your credit to tier 4 and maintain it. Unfortunately, apart from the obvious things like late or missed payments, most people don't know what hurts their credit score. So let's look at a couple of habits that can massively damage your credit standing. High credit card balances or maxing out on your credit card. Keep your card utilization at 30% or less. Closing old credit cards that you don't need anymore, the longer your credit history, the better for you. If it doesn't cost you, keep it. Applying for multiple cards and loans. This is especially dangerous if done within a short period. Only keeping one type of credit. It is better to mix it up. Making hard inquiries often. If you keep making loan or card inquiries, creditors think you're in a financial strife and a risk to them. And that's it. If you include any of these tips in your strategy, you'll see your credit score increase. So do you have anything to add? Comment below. If you've enjoyed watching, like, share, and of course subscribe to the channel for more. Thanks for watching. Until next time.